This is Ukemi Reddy. I am corporate cost accountant. Presently I am doing as a CO consultant in one of the MNC. So I am having 7 years of experience as a CO consultant. Okay. So let me take controlling limit. So the basic I will take the introduction first. Then we will go for what we are going to cover in total controlling module. The concepts in controlling. So this is controlling is used for managing and recording of cost and providing information to the management for internal assessment purpose. Okay, regarding performance of units. The main objective of this controlling module is internal reporting purpose, whereas FA is for external reporting purpose. So here when you are doing controlling, the main integration between FA and CO is cost element. So cost element is the main integration point between FA and CO. Here the cost element is nothing but GL account in FA we will use as a cost element. In GL accounts we will use only the profit and loss account GL accounts, not all the GL accounts. Only P&L account GL accounts we will use as a cost element in CO. Okay. Both expenditures as well as revenues. Not only cost element is representing both expenditure and revenues. Not only the expenditure is also represent revenues. Total, whatever the profit and loss account items, both debit side and credit side items, we call it as cost element in controlling. We need to activate those expenditure GL accounts as a cost element. We will do the same number, same name in controlling also. If the salaries account is having some 4 lakh GL account number, the same number we will use as a cost element in controlling. Same name also we can use. So here cost element represent both revenues as well as expenditure in controlling. So here the GL account is nothing but nature of financial transaction, whereas cost element is nothing but nature of an expenditure. So by using a cost element accounting, we are going to analyze the values in cost centers. So at different cost center levels, we are going to analyze these costs in cost center accounting. Cost center is nothing but a department. Just like example, production department, planning department, admin department, canteen department. There is no hard and fast rule to create a cost center. And as per client requirement, how the client requirement is, how the operations are going on, where you can identify the cost, you can create a cost center. So here the cost center is equal to a department. So here the cost center accounting, what we are going to learn in cost center accounting, that we will discuss now. So the values we are using these cost centers to distribute the cost between the departments using cost center accounting. So the canteen department facilities are used by production department and other departments. Okay. So we will use this cost center accounting. In cost center accounting, we are going to analyze the cost by using cost elements, and we are going to distribute and redistribute the cost between departments, and finally we are going to allocate the values to the product cost, how we are utilizing the cost centers, how the resources of each cost centers are we are using. So we are going to analyze. So in cost center accounting, what we are learning is we are going to analyze the cost by using cost elements. We are going to analyze the cost just like what are the salaries paid to the canteen department, what is the rent paid to the admin department, what are the wages paid to the production department. Okay, you can analyze the cost and you can also do planning here. In FI you can only post actuals. In CO we can do planning, we can do actual postings, and we can also analyze the variances. Variance is nothing but difference between plan value and actual value. Difference between plan value and actual value, we can do variance analysis. We call it as a variance analysis. This is difference between plan values and actual values. This facility is not there in FI. In FI, we can only post actuals. In most of the cases in controlling, we are not directly posting actual values in controlling. Through the integration between different modules, FI integration, MM integration, PP integration, SD integration. With all types of integration, the values will trigger from other modules to controlling module. Here we are doing only the calculation and analysis. Okay, we can do planning here. So what is the salaries paid to the production department for the next 1 month? What is the salaries for the next 2 months? What is the salaries for the next 1 year? What is like this? We can do planning by using cost elements at departments. Department wise, you can do planning. Okay, department is nothing but a cost center here. We collect the cost department wise. What is the total cost of a particular production department? What is the total cost of a particular canteen department? And we distribute to other departments. The values are distributed to other departments based on how we are utilizing those departmental services. Finally, we will allocate to product costing based on how the product utilizes the resources in each department. That is what we are doing in cost center accounting. In this cost center accounting, we are going to cover all these topics. There is a activity dependent planning is there, activity independent planning is there. Activity dependent means with reference to activities. If a particular cost is purely dependent on activities, if you are performing some labor activity, so this cost we call it as an activity dependent cost. Activity independent cost, without reference to any activity, if you are performing any, if you are incurring any cost, without any reference to activity, if you are incurring any cost, that is activity independent planning. So there are different planning is there. In planning also, manual planning is there, Excel upload is there. Two different types of planning, manual planning and Excel upload. So manual planning, in this manual planning, we are going to use the system defined planner profiles. In manual planning, we are going to use the system defined planner profiles. The structured layout will be there. SAP has defined some layout. The planner profile will contain the layout. By using these layouts, we can do planning. In planning also, cost element planning we can do, activity planning we can do, statistical key planning. All these different types of planning by using SAP defined layouts. Excel planning is also there. This is where we will do this Excel planning is when company code currency is not equal to controlling area currency. Company code currency is INR, controlling area currency is Euro. Then we will use this Excel planning. We will prepare some layout here. This layout we will use in planner profile. We are going to create our own planner profile. What are the columns we require? What is the information to require to do any planning? The same whatever the planning we are doing in manual planning, same way we are also going to create our own layout, and this layout we are going to upload into Excel sheet. Through this Excel sheet we are going to upload into SAP system, that is Excel planning. So when we will do this Excel planning is when company code currency is not equal to controlling area currency, we will use this Excel planning. In Excel planning also there are all types of planning is there. So we are going to prepare different layouts. Okay, many concepts are there. We are going to prepare different layouts in cost center accounting planning. So there is a splitting structure is there, cost component split. how the values are going to split between the activities. The splitting concept also we are going to learn here in cost center accounting. If a particular cost are depend on few activities only, how the values will be shared to different activities, that we are going to learn here in cost center accounting. Again, at the end, as a period end process in cost center accounting, we are going to allocate the values between the departments and finally to the forecasting. When distributing, and there are allocation methods or different types of allocation methods. One is distribution method, another one is assessment method, and different reposting are there. In distribution and assessment, we are using distribution cycle and assessment cycle. We are going to create different cycles, and there are different methods are there in only the distribution method. By changing sender rule and receiver rules, we are having 12 methods in both distribution and assessment. All 12 methods we are going to learn. Okay, in depth we are going to learn total cost center accounting. This is related to cost center accounting. Next one. So I am taking, after cost center accounting, I am taking product costing. Because this is important topic, so immediately we will take up. So other internal audits and profit center accounting is only small topics. At the end we can learn. This broadcasting, many scenarios are there. What we are going to do in broadcasting, that we will discuss now. So broadcasting, we provide the cost of the broadcasting, will provide the cost of product. Nothing but in detail cost. Each component wise we are going to calculate the cost of goods manufactured. So it consisting of any cost of goods manufactured, the breakup if you want to see, it consisting of material cost, labor cost and overhead cost. Okay. When we are doing cost of goods manufactured, it consisting of material cost, overhead cost and we will just explain with Excel sheet. So here COGM, we are doing product costing, right? When we are doing product costing, okay. So here the main objective, one of the objective of product costing is to calculate COGM. Right? In COGM, the breakup, if you divide the COGM breakup, this includes material cost, okay, activity cost and overheads. So this material cost, where the values will come, trigger from to material cost. So here we are going to learn all the material purchases will be happen in direct postings will happen in FI and MM. So this FI and MM integration we are going to learn before forecasting, because the material cost will trigger from FI module and MM module to controlling module. Here we are going to learn FI and MM integration. So material cost. So material cost we are getting from FI module and MM module. Next one is the activity cost. All the production process is happening at plant level. Plant is an organizational unit in logistics modules. What are the logistics modules? MM, PP, so WM. These are logistics modules. So all manufacturing activities are performing at plant level. So where plant is a logistics module organization units. So labor cost, machine cost, any setup cost, assembling cost. What are the activity costs we are having? So with this all logistics module integration, so here we are going to learn PP integration also. We are going to learn PP integration, FIMM and PP integration. With all these module integrations, we are getting material cost and activity cost. And also the overheads, how the values will be calculated, the overheads. So here by using the costing sheet, here we will use costing sheet we have studied in our costing subject. By using this costing sheet we are going to get the material overheads. Assume material overhead is some 10% on material cost. admin overhead is some 15% on activity cost. So like this, the overheads will be calculated. All this cost includes the cost of goods manufactured. Cost of goods manufactured includes material cost, activity cost, overhead cost. That's what we are calculating in product costing. So another thing also we are doing here, when you are manufacturing some finished goods X, let's assume we are manufacturing some 10 kgs of finished goods. Out of 10 kgs, 6 kgs we have received. Okay, production is over. 6 kgs of production is over. The remaining 4 kgs are still in process. This we call it as a work in progress. The cost of work in progress we will calculate in product costing only. All values will trigger from FI to CO. The cost and revenues will trigger from FI to CO. The expenditure we are getting from CO to FI is work in process or work in progress. This work in progress cost where we are displaying in balance sheet as a asset we are going to show. If you have written off any work in progress, then there is a profit or loss account expenditure. Here we are calculating work in progress. In product costing, that will trigger to FI. From CO to FI, the values are flowing here by using this work in progress cost. Here in product costing, we are going to calculate the work in progress. So this product costing, there is in-depth concepts are there like product cost by period, sales order costing. Okay. Total product costing we can divide into two scenarios. One is make to stock, another one is make to order. Total product costing we can divide into two concepts. One is make to stock, another one is make to order. Make to stock is for regular manufacturing process. We are inventorizing the stock after finished goods. This is not specific to any customer, just like our FMCG industry. Soaps, paste, everything, that is make to stock. We are inventorizing the material after production. We are not manufacturing for the specific customer. In this make to stock, there are different orders are there. Production order, process order, product cost by period. Production order, process order, product cost by period. Three different concepts are there that we are going to learn in this product costing. And in make to order, sales order costing is there, that we are going to learn in make to order concept. So in basic all product costing scenarios, so there is different methods or special scenarios are there like joint and byproduct, mixed cost estimation, okay, material origin, material groups, okay, overheads also we can calculate quantity based and value based. Different types of overhead costing sheets we can define. So this product costing itself takes more than 1 month. In detail, we are covering all the topics. Total product costing we are going to learn. Okay, this is what we are learning in product costing. So next one is here in product costing for the basic costing types. We are going for definitions. What is the cost? Standard cost, planned cost, actual cost. So standard cost we are going to calculate. It is an estimated cost to produce a product. To manufacture a single product, what is the standard cost? This is CK11N, transaction code CK11N we are doing. In CK11N we are going to calculate this standard cost. Next one is the planned cost. Planned cost also, it is an estimated cost for completion of the job. Job means assume we are manufacturing 10 units of finished goods, that is a job. If you are manufacturing 100 units of finished goods, that is a job. So this we will do. This is also as per planned value only. The values will be updated. It's a transaction code CO01. When you are creating production order, the values will updated as per planned value to manufacture 10 units of finished goods. What is the cost as per planned value? That we will get in CO01. So actual cost, when it comes to actual cost, So this is the actual incurrence. What actually we have consumed materials, what actually we have confirmed activities for this particular job. That is the actual cost. Like this, there are different costs are there. We are going to analyze the things. That's what we are doing in product costing. Next one is COPA, controlling profitability analysis. This is also an important topic for any controlling consultant. It provides full information to the management regarding profitability, product profitability. Right? So we are doing here multi-dimensional analysis with reference to dimensions. Means here, if you are manufacturing a finished product, here what we are doing here is, so up to product costing, we are calculating COGM, cost of goods manufactured. Right? So in COPA, what we are doing is, in COPA, so for cost of goods manufactured, we are adding selling and distribution cost. For cost of goods manufactured, we are adding selling and distribution cost. This selling and distribution cost we are getting from FI and SD integration. Here we are learning FI and SD integration before COPA. Okay. So this cost of goods manufactured plus selling and distribution cost, finally we will get cost of sales. From this cost of sales, if you deduct any sales value, sales minus cost of sales, sales minus cost of sales will become net profit. This net profit we are going to analyze. What is the profit we are getting from a particular product? What is the profit we are getting from a particular customer? What is the profit we are getting from a particular region? Or with all these different combinations you can analyze that. We call it as a multi-dimensional analysis we are going to do in COPA. Here we are also having some report painter concept. If the client is asking some separate report, which is not a standard report, that is what we have learned in costing, managerial accounting subject. Ratio analysis we can do. Whatever the analysis the client is looking for, we can create the different reports by using report painter concept here. Here we are also having two different things, that is costing based COPA, another one is account based COPA. Okay. Two different things are there, costing based COPA, account based COPA. So in costing based COPA, the values, by mapping the value fields, it will update to the COPA. In account based COPA, by direct posting from the FI through cost elements, it will update to the COPA. The slight difference is there, that we are going to analyze the things in costing based COPA and account based COPA. Okay, that is what we are learning in COPA, controlling profitability analysis. Okay, next one. So we can see what is the cost of sales here. After getting cost of goods manufactured, we can add selling and distribution. Whatever we are getting is cost of sales only. The contribution analysis with respect to market segment price, that's what I have explained. The major integration is from product costing. From product costing, what we are getting? Cost of goods manufactured, and from FI, the selling expenditure, from cost center accounting, marketing department expenditure, from SD and customer service also we are getting some sales commission, discounts allowed. All these different types of expenditures we are getting from through different sub-modules. Here when we are doing COPA, we are going to create one operating concern as an organizational lead. Operating concern is the highest node in controlling module. By using this operating concern, we are going to analyze the things in COPA. Right? Next one is the profit center accounting. What we are going to do in profit center accounting is, this is used to know the internal units, nothing but subsidiary units of profits, and how these SBUs are performing. This profit center accounting will integrate with all other modules. Profit center, when we are creating profit center also, there is no hard and fast rule that you can create as per client requirement. Where you can identify the revenue, you can create it as a profit center. In cost center accounting, where you can identify the cost, you can create as a cost center. In profit center accounting, where you can identify the revenue, you can create as a profit center, and you can analyze the things here at profit center level. That is what we are going to learn in profit center accounting. This is the assignment, how we are going to assign. This is the organizational units we are having both in FI and CO. In FI we are creating company code. Company code 1, company code 2, company. So assume we are having 5 company codes. So we are having 2 controlling areas. Here we are creating controlling areas. We are going to assign this controlling area and company code. When we are assigning controlling area, we can use a single controlling area for multiple company codes. When you are assigning, we can't assign the 2 company codes to single controlling area. We can't assign 2 company codes to single controlling area. Okay. So when you are using operating concern also, same way the controlling areas we can assign to single operating concern. It is always suggestible to use the single controlling area for multiple company codes so that you can analyze if there is any intercompany transactions between these 2 company codes. All data will be stored at one controlling area level, so all information is available at controlling area level. We can easily analyze the data. So when we are assigning, there are some conditions are there. Some fiscal year variant should be the same, and also currencies, it doesn't matter. We may have different currencies. Okay. So we can use the leading and non-leading edges if the fiscal year is not matching. So all these different things we are going to learn when we are taking the first class. Up to this, the controlling what we are going to do. So next topic is the internal orders. Okay. So internal orders. I'm not going in detail to organizational units. I'm just briefing what we are going to cover. So in internal order accounting, what we are doing is, if you want to analyze the cost at lower level, at expenditure level you are analyzing. This is at expenditure level you are analyzing. At cost center accounting you are analyzing the cost at departmental levels. At internal order accounting you are analyzing the cost at expenditure level. Let's assume our client is having some huge vehicle expenditures. We are going to create one vehicle expenditure here. We are going to create one vehicle expenditure as one internal order. So at this vehicle expenditure internal order level, we are going to analyze what is the salaries paid to the drivers, what is the petrol expenditure, and what is the repairs and maintenance. Repairs and maintenance expenditures. Only for internal reporting purpose. So all these we can analyze in this internal order accounting. So internal order accounting, we are analyzing the cost at lower level, that is expenditure level. In cost center accounting, we are analyzing the data at departmental level. So totally this is what we are learning in controlling. So in controlling, we are using for planning. Controlling is for only reporting, internal reporting purpose. Here we can do planning, we can post actuals, we can do plan, we can post actuals. Okay, and we can also do variance analysis. Whereas in FI we can only post actuals. Okay, all values will come from FI to CO except work in process. Work in progress we will calculate in CO, that will trigger to FI. Okay. All these things we are going to learn in controlling. So I will show you how the values are going, what actually we are doing in controlling. How the values are going in controlling, that we are going to see now. Just brief up what actually happening in controlling module. Right? So I will just brief up what are these 1000. So 1000 cost elements as a primary cost element, 1001, 2, 3, 4 up to 7 up to this 2000. I am just giving 1000 I am using as a material, direct material. This GL account we will be using as a cost elements in controlling salaries, depreciation, direct expenditure, sales commission. 1006 is cost of goods manufactured, 1007 is cost of goods sold, 2000 is revenue. Okay. This is what we are using in for our analysis, how the values are going. 42, 41 categories, secondary cost elements. I will explain what is the difference between primary and secondary when we are taking cost element accounting. So these secondary cost elements are used to allocate the values from one cost center to another cost center. This we are creating only in controlling module. There should not be any corresponding FIGL account. Okay, these elements we are using. Now I am going to sheet 1. So here I will explain how the values are flowing here. So this is from FI module. These amounts are coming. In other, these are material costs, some salary costs, some depreciation. All these are expenditures, direct expenditures from FI module. These are our cost centers. We are having canteen department, material department, marketing department, production department. Assume these are our cost centers. We are manufacturing some two goods. In product costing, what we are doing? We are manufacturing finished goods X and finished goods Y. So in COPA, we are analyzing the cost profitability analysis of this finished goods X and finished goods Y. These are things we are doing. So first, this 1001 material are using in assume this 1 lakh is using 10,000 rupees in material canteen department, 15,000 in material department, 15,000 in marketing, 60,000 in production department. Like this 80,000, where you can identify the cost directly in the cost center accounting we are posting. From FI to CO it is coming. In which cost center you are using this materials, you can post directly from FI module. This is 1000 rupees is direct material. Assume here this 50,000, out of 50,000, 30,000 we are using to manufacture finished goods X, 20,000 we are using to manufacture finished goods Y. Okay, 20,000 we are using to manufacture finished goods Y. Right? So next cost, this is 1004 cost and 1005 cost. This 1005, 1004 and 1005, this represents 1004 represents direct selling expenditure, 1005 represents sales commission. These we can directly assume, here we can directly post into COPA. This is using, this expenditure using for finished goods X 10,000 and 5,000, this is for finished goods Y 3,000. Okay. These are our total cost direct expenditures we are using at different levels. Few are in cost center accounting, few are for product costing, few are in COPA. Now we are going to allocate the cost, distribute the cost on some basis. The client will tell us how you are utilizing the resources of each department. Assume this canteen department 15,000 we are allocating to all other departments 1,000, 5,000 and 9,000. How they are using? Assumption is they are using some basis. To allocate the cost from one department to another department, we are using this cost element. How the values will be represented? It is represented by secondary cost element, 9,42,000 category cost element. 9,42,000 is the cost element we are using. How the values are represented. So here canteen department cost, 24,000 assumption we are using this production department facilities to manufacture this finished goods X 24,000, to manufacture this finished goods Y 36,000. These cost are allocated this one. This is 43 category we are using for activity cost element category. 43 is for indirect overheads, that is activity cost. 43 category we are using. Next one is the remaining balance. The remaining balance, so in the production department also we are using for another activity. Assume the different activity here, and we are distributing to finished goods X and finished goods Y. How we are utilizing the activity cost, how we are utilizing the production department to manufacture finished goods X and finished goods Y. Now production department cost will become 0. Next one. Now the total cost of manufacture, cost of goods manufactured for finished goods side, finished goods X is 88,364, here 95,635. These values are, we are transferring to COPA. Cost of goods manufactured is transferring to COPA. So for that 15,000 and 3,000 are already directly posted to COPA. This is cost of sales. These are selling and distribution cost. 15,000 and 3,000 are selling and distribution cost. These are our cost of goods manufactured. Total is cost of sales. For this also some 16,000 from material department we are using as a sample distribution. Assume some materials we have distributed as a sample distribution. Some selling and advertisement expenditures we are adding. 64,000 and 94,000, 9,600 and 9,600. Here total is we are getting as 12,000. This out of this 30,000 also some assessment cost elements. So what is this department? And this is marketing department. Some marketing department cost also we are assigning to COPA. Assume, so we are spending some marketing cost to sell this finished goods X and finished goods Y. So this is cost of sales. Total is cost of sales. From this cost of sales, this is sales value. Sales value minus sales value. This is what we are getting, net profit. This is how the data, the cost will flow in controlling module. This is how the cost will flow. Total controlling module, whatever we are doing is this thing only, right? So here we are doing the cost center accounting, product costing and COPA. The values are coming from directly from FM module. We can use different methods in allocation and assessment, and how the analysis will be done at COPA level, and also cost of goods manufactured, how we are calculating in product costing. This is just an overview how the values are flowing in controlling module. Okay, this is what we are learning here. So I will just show you the content what we are going to cover here. So this is what we are going to do. So from basic settings controlling, if you already attended any FSCO, then it's easy to get these basic settings. After the cost element accounting, here we are going to create the primary as well as secondary cost elements, and also groups, different activity types, and also escapes, and also grouping. Grouping is only for reporting purpose we are using. So by using these cost elements, we are going to analyze the things in cost center accounting. So here these are our important things. There are different types of methods are there: activity dependent, activity independent, and output planning. Nothing but activity planning. We can create our own planner profile and we can upload by using this planner profile. The Excel upload we will learn. Okay, this is also important concept in cost center accounting. At the end, we are going to, these are different methods, all these we are learning. Again, integration between FI and ML. So here we are going to learn the integration with different scenarios. If the material is maintained at moving average price, if the price difference is there between production purchase order and goods received, purchase order and invoice received. Okay, if the material is maintained at standard price, if the price difference is there between standard price and purchase order price and invoice price, then what will be the in-depth? Okay. So in product costing, so all the scenarios from basic scenario to up to advanced topics, all related to PP settings also we are doing. We are going to create a work center, because in through work center, cost center only we can update the values. In product cost by period, the work in progress, variance and settlement is period and process. This we are covering in detail. How the values are calculating in work in progress, I will explain in detail how the values are calculated. So in special scenarios, all these things we are doing. So in case of special procurement key. So in component split also there are different types of primary cost component split, auxiliary cost component split. Okay. So in joint and byproducts also different methods are there, NRV method and apportionment method. So there is a mixed cost estimation, is there, split valuation, subcontracting. In subcontracting also, if you subcontract a particular finished, semi-finished product, what will happen? If you subcontract particular operation, external operation, what will happen? How the values will change. In scrapping also, three different scenarios are there. Assembly scrap, component scrap, operational scrap. Differently we will use. Or if you are having in a particular scenario, all these three scraps in a single scenario also we are going to learn. Origin group, if the material is having different origin, material is the same but origin is different. Then one is local material, one is imported material. Material master is the same, how the values will update. Overhead key and overhead group, how we can calculate with the different overhead keys and groups. Different methods of overhead calculation we are using. That is the basic production order. Next one is the product cost by period. In the production order case, at the production order level, we are doing period and processing in the product cost by period. Every month and on 30th of every month only we are doing the period and process. If the process is a continuous process, then we will use this product cost by period concept. So in this product cost by period also there are three different process scenarios are there. Product cost with work in process, without work in progress, product cost period with production order also. With all these scenarios we are going to learn. Product cost by sales order. Okay. This is also important concept. If you are manufacturing a product only on customer request, after getting customer order only we are manufacturing a process, then in this case how the values, how we can do sales order costing. Here sales order costing also three different scenarios are there. If the sales order with value to stock, with cost object, value to stock is not a cost object, is non-value to stock, where sales order is a cost object. All these three different scenarios we will cover. So product costing itself, it will take more than 1 month. Okay, in detail, nothing left in product costing to learn. And actual costing and material ledger. What is this material ledger? Okay, this is separate scenario, I forgot to explain. So this material ledger concept is very important, the latest concept, the material ledger, actual costing material ledger. Actual costing material ledger. What we are doing here in this actual costing material ledger? So in this material ledger, so we are going to learn the different price variations. Assume we are consuming some goods, raw material consumption is happened. Where we will do goods issue to production. Assume we are goods issue to production, raw material X is we are using to manufacture some finished goods X. Some 10 kgs we are using, assume some 10 kgs we are using. Okay. So assume this 10 kgs cost as per purchase order some 100 rupees. 10 kgs cost as per purchase order some 100 rupees. The total cost is 1000 rupees. Total raw material cost is 1000 rupees. This is raw material cost, right? Material cost. right? So here some activity cost is also there. Some activity cost is this is 2000. Some material overhead cost is material overhead is some 10%. This is 10% on material cost, assume 100 rupees. Admin overhead is some 20% on activity cost, assume 400 rupees. Then this we call it as a cost of goods manufactured. Cost of goods manufactured is 3500, right? This is 3500. This is cost of goods manufactured we are getting. So we are thinking that this is the actual cost. But when invoice comes, this consumption is happened, production is also over, goods also received. Assume now invoice received, IR, invoice received for raw material X. When we are receiving invoice, so the price is assumed some 120 rupees. Price is 120. Price change is there. But in our cost of goods manufactured we have entered only 100 rupees. The 20 rupees difference is there. So it will differ 200 rupees in material cost, and for that 10% means 20 rupees difference will be there in material overhead. Same way, assume the activity revaluation, activity cost we have revaluated, activity cost also it differed. As per here, assume we are using some 100 hours with 20 rupees per hour. So assume now it is 30 rupees per hour. Assume this is 30 rupees per hour. So with 30 rupees, so here it will differ 1000 rupees. 100 hours into 10 rupees difference is there. Here on activity cost also it will add 200 rupees. This is actual variation. Right? This is actual variation. Actual cost is 1200, 3000, 120, 600. Right? This is actual cost. Okay, 4920 is the actual cost. Actual cost. Whereas we have entered as, we have calculated previously as 3500. How these values will be affected? How the values will be updated? This actual cost, how? This is a drawback of existing system. So after this material ledger activation, so we can also update these price differences to the respective values. This price difference, it will also include in work in process also. Okay, it will also include wherever the price difference will get affected. At that area, we need to change these price differences. This is what the material ledger will do the things. If you activate this material ledger, whenever the price differences are there, it will affect the corresponding by using some settings, the pre-configuration we will use some clearing accounts, reconciliation accounts to post these adjustment entries. This is what we are doing by using. There is separate document it will generate when we are posting, that is ML document. We call it as a material ledger document. Along with FI controlling document, COPA document, there is ML document is also there. That will post if there is any price difference is there. So this we are going to learn in material ledger. This material ledger also very important topic for any controlling consultant. Okay. Next one is FISD integration. Here, so whenever there is financial transaction, if you are posting anything in SD, that is also automatically updated to the FI. That is, we will do in VKOA settings. Transaction code is VKOA. For that we are learning all these. Total sales order cycle we are learning here, and how the values will updated in FI also we are learning. This FISD integration is required for COPA purpose, controlling profitability analysis purpose. In COPA also we are learning, we are going to create all the value fields, what are the characteristics, how the value fields will be updated, and account based COPA and costing based COPA also we are learning. So again, internal orders is a simple concept, nothing much. Profit center accounting also simple concept only. That's why I kept these two areas at the end, so that there is a possibility that we may lose interest at the end. So that's why I keep it these two areas at the end. So the period end process, normally we will take up all the period end process scenarios. Right? This is what I am covering. So for all these things, I am having some material like this, ready-made material, printed material. We can take printout here by showing all these material. I will explain you. Total classes, theoretical classes I will take up by using these PPTs. Like this, I am having PPTs for all the theory topics. I will show PPTs, and I will share these PPTs to you also, and this material also I will share to you. Having for all the controlling and FA topics also, we are having total material like this. You can take a printout. When I am taking classes, we have to fill these blanks instead of writing all the notes, so that you will get some time to understand the concept rather than writing the notes. It will save our time, and also it will clear your doubts. You may not get many errors when you are doing practice if you are having material like this. For all the controlling module, we are having material like this. So I will share all the PPTs and material with you, and recordings also every day we will share to you. This is what we are covering. So it will take more than 150 hours, around 120 to 150 hours. On an average, it will take 150 hours total duration. Okay. So it is what we are covering. Thanks for listening. So we are closing this session. Right? Thank you.